Hello guys. Hey guys. Alrighty, well we're gonna go ahead and get started here. I hope everybody can hear me. It's not showing on my end if my mic is working like usual, but let me know if you can hear me. So I'm assuming everybody can hear me, so I'm gonna go ahead and get started here. So basically this video is here to introduce you to TradingView, introduce you to how to use TradingView, how to set up your TradingView, and we're also going to kind of cover a little bit of how to basically set your TradingView up for some good day trading. So essentially, there are, as you can see here, and this is right on TradingView. So I am using the desktop app for TradingView. So if you are on the desktop right now or your phone or whatever else, you can go ahead and follow along with us here. I'm just going to put out a quick alert that we are live. So give me 1 second here. Alrighty, so there are 3 main plans. They run specials all the time. The specials can be good, they can be kind of bad. It just depends a little bit on what you're thinking, what you kind of want out of TradingView. So I think honestly, most people probably do just fine with the essential plan. And as you can see, I have the current plus plan. That's like the right in the middle there. So you can do 2 charts per time. This is the essential. We'll start there and then kind of work our way around here. So the essential plan is basically it's their basic plan. So it has 2 charts per tab. This is where it really matters here is 5 indicators per chart. So when you have, and I'll show you in a little bit here, when you have a chart pulled up, you will then be able to have 5 separate indicators pulled up at one time. Now, it's important to know for TradingView that if you put on one, like a 5 minute, 15 minute, or a 5 minute 20 EMA, that is one indicator. So if you put on a 5 minute, so if you have, let's say, a 5 minute 20 EMA and a 50 EMA, plus you have, let's say, like a DMI, you have volume on there and like a volume profile, that's already 5 indicators. And if you have those 5 indicators, then you are already maxed out. So that's kind of where I think the plus comes in help, and that's why I pretty much have the plus, just to have some more extra indicators, mostly for my daily and my weekly charts, because I do use TradingView usually for my YouTube videos, but I actually primarily trade off of Thinkorswim. So when I'm in day trading during the day, I don't actually use TradingView at all. The only thing I do from TradingView during the day is I have a watch list pulled up, which I will show you, and I will kind of talk about that later. So you guys can kind of scroll through. There is as you can see up here, a non-professional and a professional. We're all non-professional, so don't be trying to have them make you pay for a professional or anything like that. Just pay for the non-professional. But for the most part, you scroll down here, they're all pretty similar. Obviously their premium gets you quite a bit of little extra stuff and whatnot. And if you scroll all the way down and stuff, there's tons of different breakdowns and stuff. I think most people honestly probably are okay with the essential, depending on how many indicators you like. Otherwise, I think you should go with the plus plan. And again, I have no affiliation, just to make this clear, I have no affiliation with TradingView. I make no money off them. They don't pay me anything. They probably don't even know I'm doing this video, and they probably don't really care if I'm doing this video, but I'm doing this just to help you. So if I say, oh, I think you should do this, or I recommend this, it's not because I don't want any commission, nothing like that. I'm just trying to recommend what I think would be best as a trader for you. The one thing I will say, just as a heads up here on the TradingView for the plans, I have never had an issue myself but I have heard and read a lot of stories of people being charged either multiple times for a yearly or a monthly subscription, or I've also heard of people canceling their yearlies and still being charged. So if you do end up getting TradingView or whatever you end up doing, I just would kind of follow closely to your charges. So I'm going to go ahead and close this out here. The next thing we're going to move to is market data. So this is important. Now, when you get the basic plan here, and this is a big difference between something like Thinkorswim and whatever else. When you are using TradingView, there are basic data that's built in. So most of, all your ticker standard stocks are built in. You're going to get data. However, if you want to trade futures, you have to pay for live data. So most of the data that is provided is on a 15-minute delay when it comes to futures. So there's a couple different routes you can go. This is one I had for a long time, this US stock market bundle. It's about, apparently now it's $10 a month. I don't even know what it was when I had it before, but it includes the NYSE, NASDAQ, NYSE, ARCA, blah, 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 blah. But this one, I believe, also includes the CME group in it. So if you come down here, this is the one. So obviously I'm trading futures now. I'm sure most of you are probably are transitioning to futures, it seems like, too. If you are trading futures, you need this CME group right here. This is the only data that I personally pay for on TradingView. I don't pay for anything else. I had a couple other ones for a while when I was doing more trading, like mobile. This is like before I was full-time and stuff. I did a lot from TradingView, so I wanted the fastest data I could have. There are some different datas there. You got to just kind of see what you want. But this is the big one right here. If you want live futures data, and this includes the VIX too, this is the one you want right here. Okay, so next thing we're going to talk about here is going to be a layout. So what is a layout? So this is basically my TradingView setup here. It's a little different because I had to make my window a little big. But basically this is kind of what this window sits hidden in the background. And this watch list right here is pretty much all I watch all day. And then I usually either have the dollar or the 10-year or 15-minute chart pulled up, so I can kind of just watch what it's doing like in the second if I'm about to enter a trade or something. But this is my standard watch list that is always up in my background. I basically watch, top 10 tickers here plus AMD. I'm watching the VIX. I want to know where SPY-X is at, just as a comparison, because some people ask, since I trade mostly NQ, but people usually ask. You got your Dow. I do like to watch Bitcoin, mostly for fun. I don't trade off of it, but mostly for fun. And then obviously this is oil, the dollar, which I think is super important, and then the 10-year. So what is a layout? So a layout is basically something that attaches your indicators, and it's not to a time frame, but it's rather to a difference. So if you go up here, you can see these are all my different layouts I have. So I have a daily, a weekly, a 15-minute, and then I have an Apple daily, which is basically something different. But you have to build these layouts. So the best way I can describe it here is if you want to have a 5-minute chart, let's say with your 20 EMA, your 50 EMA, let's say a DMI, and I don't know, volume profile. You have to make a new layout and then attach those indicators to that layout and that time frame. So, you could then, so let's say, right now we have, let's see what indicators I have pulled up here. So I have the 5 EMA and a 20 EMA. So as you see, if I go from whether I'm on the 5-minute time frame here, or if I switch over to the 15-minute time frame, my indicators, and if I make, let's say, a drawing here, my indicators and my drawing, as you can see, does not move. So that's important to note. Because if you are someone like me that trades off, I trade off the 1, the 5, and the 15 minute. Now I have 3 different windows put up that I'm watching on Thinkorswim at a time to do that. But if you were going to be, bouncing back and forth, you have to set up a layout for that time frame that you want to trade. So that's why you see on here, I have my 15 minute, my daily, and my weekly, because let's go to this is my daily futures chart. So this is what you guys see on YouTube videos. So you see I have, certain demand levels, supply levels. I have my bear channel that started right here. So this is the daily, you see the D. Now when I go to my weekly, you can see it is giving you completely different stuff. Different demands, supplies. It has a bull channel, there's no bear channel. That's because I have a different layout set up. So that's something that you need to do. That was something that was super confusing to me when I first started using TradingView, because I was used to something more like, back in the day, Weebles was the first thing I charted on that a lot because it was easy mobile. And even using Thinkorswim, you could save drawings to a time frame, and it seemed more confusing to me that on TradingView for whatever reason. So that's how you basically make a layout. You just go up here, do a layout, make it a name, and you can kind of go from there. So this is important too when you're mobile trading. If you're on your phone, you will be able to choose different layouts. So, you can go on your phone, you can go right here, it says load layout, and then you click that and you'll be able to pick a different layout. So next important thing to talk about is the watch list. So this is the watch list right here. And I'm just going to go back over the Dixie real quick, or the dollar here. This is where we're going to do most of it. I'll pull up a different ticker later when we start setting up for day trading here. But so this is your watch list. So you can see here, you can create new list. It gives you a basic already read list. If you click this little thing right here, this little, I guess it's a ribbon, it highlights it red, and then it'll add it to your red list. So I guess that's just kind of like a hot ticker watch list for yourself or whatever. But in general, you just go up, click create new list, and then you can start adding symbols. So what's cool about this is you can move your symbol or your tickers to whatever you want, whatever order you want. And then if you just want to delete it, you can do that. And then to add a new one, you go to add symbol, and then let's just do VTI. So then you can add it right there, and you can do whatever you want. I think the watch list is important. Again, for me, I would say primarily my intraday use of TradingView is just the watch list. I like to watch what all the individual tickers are doing and things like that. So we're going to talk about some of the tools you have here. There are, thousands of features here on TradingView. It actually has quite a bit of features, and it's a pretty nice interface, I feel like. It feels far more, I would say, present day versus Thinkorswim, which again is what I use for my day trading, is very archaic and feels like the 90s. But that's just kind of where my indicators are at and things like that. So, that's kind of where I'm at. But so there's a lot of different things here. So you have a trend line. So your trend line is basically just your general line like that. This one I like a lot, and I wish this is a feature actually that Thinkorswim has. So you have an extended ray. So you can click the wick right there, and then you could click another wick right there, and then that line extends for basically infinity. So I like that a lot because on Thinkorswim, if you're making a bear channel, you essentially have to do it with this trend line. So you have to click here, kind of extend it all the way out, and try to perfectly hit your wicks, and that's obviously not the greatest way to make trend lines. So that is one thing on Thinkorswim that I wish they had, was this extended line. That extended line is one of my favorite features here on TradingView, honestly. Otherwise, you can make some parallel channels. This is a nice feature too, if you're trying to make a channel, so you can pick your targets and then you can kind of do something like that. I actually really love this too. It looks really clean. And you can go up here and you can, you just do that. You just double click on it. And then you can kind of change your opacity, so you can see, like, you can make it super dark, you can make it very light. So if you want, you know, a channel and you want to be able to show that it's within it, this is a great way to draw it and kind of have it look present. Actually, I kind of forgot about that feature, to be honest. I used to use it a lot on my on the daily, but that's a really nice feature too. So that's basically your trend line tools. So then you have all the Fibonacci tools down here too. So I don't use any of this stuff, so I couldn't really tell you much what they do, but anybody that's looking for a basic, you know, Fibonacci, you can do this here. So let's, you know, say we're doing it here. So you do have that tool here. They have tons and tons of other stuff under there. So you can go down here to the next one we have is patterns. So, you know, the only one I've ever really used here is kind of your Elliott wave. So you kind of just draw it out here. You know, if you ever were trying to find a trend like that, something nice to have. And this is one that I really like, and you see me use this a lot. This is called the forecast. So let's say you wanted to see exactly how much it was that we dropped from this point to this point. You just click from point to point, and then it'll tell you exactly the dollar value, exactly the percentage. And this is cool too, because it'll tell you exactly the time. So if you move this forward a little bit, you can see the time changes with it, and then you got your percentage and your dollar value changing. I like that one a lot. You know, if I'm trying to, especially here on the daily, you know, let's say I'm trying to say, okay, how much more of a drop do we have to, let's say the 50 EMA. So you can take your line, you go right down there, the 50 EMA. Oh, okay. So SPY is only 2.1% from the 50 EMA. So I like that feature a lot. I think that's a great feature. And that's probably one of the ones I use the most. You got your general shapes and other jazz. You can, if you ever wanted to like label, like let's say this was, you know, big breakdown. I'm just going to make something random there. Big breakdown. So you can add that in. So if you were, you know, let's say going back later that you took a short there because whatever, and you wanted to know why, you could say, oh, there was a big breakdown, and you could start labeling it why. So if you were reviewing your trades later, you could, you know, do that and whatnot. So that's kind of the basics of that. So if you guys have any questions just off the bat here about TradingView, let me know. Otherwise, we're going to jump into kind of setting up your chart for day trading. So I'm going to cover a couple different indicators. So I'm going to talk about the ADX. I'm going to talk about MACD, RSI, DMI, Stochastic Extreme, fair value gap, the exponential moving average, opening range breakout, and volume profile, and then volume weighted average price, so VWAP. So kind of we're going to talk about these. We'll add them to the chart. We'll kind of show what they do. So let's pull up NQ here just to make it a little more easy to chart, because we don't really trade off the dollar here. So let's go ahead and I'm not gonna delete them. I'm just gonna hide them here for you, so that way we can kind of start a basic chart. So this is kind of how your basic chart, when you pull up TradingView and you're ready to start trading, this is what it's gonna look like. So one interesting indicator is the ADX. So I'll kind of explain what that is a little bit. It's the average direction index. So essentially what this is, it's a specific indicator, and this is just basic from Investopia, so you guys have a solid, easy to understand definition, but it's a specific indicator used by technical analysis and traders in order to determine the strength of a trend. The trend can either be going up or down, which is shown by two indicators which often accompany the ADX. The positive direction indicator and then the negative direction indicator. The ADX is presented with three separate lines symbolizing each indicator. Each line is used to help assess a trade and whether or not it should be taken a long or short at that time. The ADX indicator on TradingView does not display those lines by itself, though, so that is something to keep in mind when you're using this one. But you can use the DMI, which is something we'll talk about later, as a beneficial indicator with it. So a lot of people most indicators should not be used by themselves. So even the DMI, which is the the directional movement index, I use the DMI on the 1 minute time frame. I use that for basically my actual entry. I don't find my setup based on the DMI. I find my setup based on the 15-minute chart, but when I'm ready to actually enter a play, I will use the 1 minute chart and the DMI. So every time you use an indicator, you should be using it with something else, whether that's reading price action, a second indicator like this one said, if you use the ADX for strength of trend, that is not an indication of when to get into the trend. It just shows if that trend is strong or not. So if you want to add an indicator to your chart, you go up here, obviously it says indicators. So if you click on indicators here, this is kind of what it pulls up here. So there's a couple different ways you can do it. If you go to my scripts, if you have a script you added yourself, you can do that. You can go to technicals. So this is a really cool, and actually Thinkorswim has this too, but I really like this about TradingView because I mean, they have just hundreds and hundreds and hundreds of different strategies and indicators, and there's different profiles, patterns, all those different things that you can add to your chart that it will sort of put on there for you. And all of these ones under technicals are actual TradingView, I would say, posted indicators, meaning that the TradingView themselves, for the most part, built that indicator and then added it to the charting system. However, if you go down to community scripts, which this I think is so cool, and this is something I wish Thinkorswim did, but you can go down here and you can search all these indicators, and it will never stop. If you keep scrolling, you could probably scroll for hours. There are hundreds of thousands of indicators on here that you can search. So let's say we wanted to find an ADX. I already have one I'm going to show you later, but let's say we wanted to find an ADX. So you just put in ADX. So here you go. So this one right here, this is the one I'm going to show you later. So on the ADX here, you already have, and this is under technicals here, you can see. So this is the TradingView based ADX here. So if you start scrolling here, you'll see these are all people, and this is usually their username or whatever they go by. And this is, somebody has made this indicator, and you can, this uses like PineScript, it's called, but you can make these indicators and then you can add them to your chart. And when you add them, or when they make them public. So basically anybody that wants access to them to get it. When you look at this number over here, in general, my understanding about that is how popular that indicator is. And another cool thing I like over here is if you go to read more, it'll pop up this, and it'll usually give you a preview of what your chart will look like with that indicator. So let's say you want a specific looking ADX, you want it to read out a certain way or move a certain way or whatever. You can go and you can see here's the ADX and DI. So, you can see here's your 3 lines that I was talking about. And this is what it's going to look like if you add it to your chart. Sometimes too, the creator will put little notes right here and stuff. But another cool thing here is if you are somebody that is into coding by yourself, this is the source code. So this is essentially what they use to build the code. So if you wanted to change something, the colors, and you knew how to do that, they give you the code to do it there. So let's go down to another one. Let's go to this one right here. So same thing, you pull it up. Okay, so this is what this one looks like. Same thing, 3 lines, a little bit different colors, a little bit different. So you can see here they put like a little bit about the ADX there. So what we're going to do is we're going to stick to just the general basics here, the ADX index. So again, the TradingView base ADX is just 1 line. So in general, when you're using the ADX, the higher up we are here. So it looks like theirs is, that is not what I wanted to do. Hold on, there we go. In general, if the ADX is going up, trend is obviously strong is strong. So you kind of correlate it here. So this is a good example right here. So this is obviously the NASDAQ NQ. So you can see when we were on this drop, this was Tuesday from 3:45 a.m. until really 2:30 p.m. So you can see we had this huge drop on NQ, and you can see the ADX rose with it. So that shows that trend was strong to the downside. So that was a very, very strong trend versus, let's look at, so here's a potential example, I guess. So we have a drop here. The ADX did rise slightly, but it did not rise the way we did on this other drop. So that way, that's something you can use the ADX for is, is this a strong drop? So this would be a great example right here. So this was Friday at 8 a.m. You can see we had a huge pump here on NQ, but look at the ADX. The ADX actually was dropping, relatively speaking, at that time. That means this pump that we had right here was not a strong trend. So that's something you can use the ADX for. I personally do not use the ADX. I'm just talking about it, and there's a couple other ones that I'm going to talk about, and then I'm going to show you my setup or a similar setup. I can't show you exactly my setup because I use Thinkorswim, and my stuff is kind of proprietary, but I'm going to show you, talk about a couple other ones just so they're out there so you're aware of them, and then I'll tell you kind of what I think is a good setup as a basic here. So that is your general ADX there. So for your indicators here, if you want to close them, you can collapse it like that, and that just kind of puts it to the bottom of the screen if you wanted to hide it. This maximizes it, so that was when I double clicked it. So if you wanted to, whatever reason, if you really wanted to zoom in on the indicator, you could make it a big screen. And obviously you can close it, and then once you have another indicator, you can move them up in different strengths. Something else you can do here is there we go. So your settings on the left side here, if you go to settings, so if you want to change your smoothing, your length, you can change the color if you want to. Let's say we want it to be blue. So there you go. There's your blue. Visibility. So if you don't want it on certain charts or whatever, there's a bunch of customability here. And then this little eye here just hides it. So if you don't want to have it visible anymore, you can do that. So next one we're going to talk about here is just your general MACD. This is a cool one that I found long ago when I was using TradingView. I am not familiar with this person. I have no idea who this person, I'm not even going to try to say this name. I have no idea who that is, but they have a cool indicator that I used before here. So this is the MACD. So what the MACD is a moving average convergence and divergence. It is a trend following momentum indicator that shows the relationship between two exponential moving averages of a security's price. The MACD line is calculated by subtracting the 26-period EMA from the 12-period EMA. So basically, the best way, in my opinion, to use the MACD, and personally, I do not use the MACD. Long ago, I used it, but I have other things that I think are better and far more reactive. But people like to use the MACD for crossovers. So here's a great example right here. This is on, again, Friday here. So you see the MACD crossed over. This was at, and that's what the dot represents there, is the crossover. And this is something you can do with just your standard EMAs too. You don't have to have a MACD. And this is something I do follow, is the EMAs intraday. So on my 1 and 5 minute chart, I use a 20 EMA and a 50 EMA. On my 15-minute chart, I use a 5 EMA and a 20 EMA. So I am very conscious of where, and we'll add these on later in this video here. I am very conscious of where these EMAs are at. I'm very conscious of, are we over the EMA or are we under the EMA? Are they crossed over bullishly or crossed under bearishly? So those are very important things to watch with the EMA, and I will talk about those here when we get to the EMA section. But what you're looking for is this crossover. So you see how the line goes from red to green. When it goes green, that's what I like about this indicator, and that's why I use it. or used it before, in theory, price will rise. So you also have this zero line here. So the theory is if we're under the zero line and rise over it, it's likely to be a bigger breakout. That's kind of the theory behind it. Again, I don't really like the MACD for multiple reasons. I think it's far too lagging of an indicator, in my opinion. I think it's more reactive on maybe individual tickers, but for something like SPY or NQ, I would personally not use the MACD. But sorry, 1 second here. All right, so you get your crossover, you see we come up, and then here's your cross under on the MACD. In theory, once this crosses under, it indicates a bear trend. Now again, so we crossed under right here. This would have been your closed candle. So let's say you took your short at 16,473 right here. Your max drawdown would have been 36 points. And again, this is a longer trend here. And then your max profit would have been 68. So that's not bad, about 2 to 1 there. So that's kind of a way you can use the MACD, is to kind of play the trend here. So you could have also said here when we pushed up, the MACD never crossed back over, so likely we were to continue lower. So when we had this rejection candle here, you could have used that as a short opportunity. So go ahead and get rid of that here. The next one we're going to talk about, and this again is one I do not use personally, but I have used in the past, is the RSI. So the RSI is the Relative Strength Index. This is a momentum indicator used in technical analysis. So RSI measures the speed and magnitude of a security's recent price changes to evaluate overvalued or undervalued conditions in the price of that security. The RSI is displayed as an oscillator, a line graph on a scale of 0 to 100. So we go back up to our indicators here, and I have an RSI in here somewhere. Okay, this is another one. So this Chris Moody person right here, you can see how popular this indicator is here. Again, I'm not familiar with him. I don't know who him or her is. I have no affiliation with them, but they have some awesome indicators. Most of the time in a script, and again, this person posted it, but you see it says CM right here. Most of the time it says CM right there. It is a Chris Moody based indicator. Likely this person took this person's indicator and changed something, maybe added, looks like they added the MTF to it, and made it a little different. So RSI, you can go ahead and add this here. So this is essentially what the RSI looks like here. So what you see here is, and like I said, it's 0 to 100. So I'm trying to get this to show up the way I want. So here's your 100 and here's your 0. So essentially the theory is if we are closer to 100, then we are likely overbought. If we're closer to, let's say back here, 0, we are under, or we're oversold. So the better way to think about this here is, you saw we had this drop under, this one has it set to 30 and 70. So essentially anything in between 30 and 70 is more or less neutral. You can track the trend. So you see how we went from here at 630, we went from about 34 on the RSI all the way up to 81 at our peak at 11 a.m. And then what happened? We had that big old dump. So we got overbought, and most importantly, we broke through the 70. So the best way, in my opinion, to kind of watch the RSI is those times that were between 70 and 100, and those times that were between 30 and 0. So anytime we're between 30 and 0, if you were in a short position, I would no longer want to be in a short position. If you are over 70 and between 100 and you are in a long position, I would start thinking about getting out of that long position. Or if I'm not thinking about getting out of it, I'm at least thinking about if I should set maybe a stop loss or a take profit. This one here, you would have to read into it yourself. I have not read into it in a long time, and I do not remember these being on here. But it looks like this has also alerts for maybe a short. Looks like there's like a short bot here, and then maybe a long bot here, green kind of areas. So you can go through the settings and see kind of what they talk about there. So again, I personally do not use the RSI. The reason I don't use the RSI is at least on NQ and SPY, because it's not an individual ticker. It is an index that's made up of obviously all the other tickers. I feel like too many times before, when I was like first ever starting day trading and just trading in general, we would have times where the RSI would be 90. But we were still pushing up, and that's just the nature of it. The RSI never, in my opinion, ever gave me an advantage. And even before, when I was trading, before I did have what I have now, I never really got any sort of extra advantage from the RSI, nor do I ever take a trade just off the RSI. But this is one that I do use. So this one right here, the DMI Stochastic Extreme. So what the DMI is, it's a technical indicator that applies the Stochastic calculation algorithm to values of DMI oscillator. This is going to be a little bit longer here, so bear with me. Two values are found on the specified period, HH and LL. The former being the highest DMI oscillator value and the latter being the lowest. The stock plot is calculated as the percent ratio between two sums. DMI Stochastic Extreme study finds crossovers of the Stochastic plot with overbought and oversold levels and marks them with arrows. According to Barbara Starr's article, the DMI Stochastic, not each arrow should be interpreted as a buy or sell signal. The author suggests using them along with the DMI oscillator instead. When the DMI oscillator is positive, up arrows might suggest a buy signal. When the DMI oscillator is negative, down arrows might be considered a sell signal. So this DMI right here, I remember when I was looking for a DMI for TradingView before, I had a really hard time finding one that I liked based on kind of the way I trade with the DMI. But this was one that I found that I did like. Again, I have no affiliation with this person, no idea who they are, but I like the indicator, so I guess they're getting a little bit of a shout out here. Well, I would like it to show up though. I don't know why that's not showing up. 1 second here. Let's see. Oh, well, I don't know why my line is white. That would be why. Okay, perfect. So the DMI is an indicator that I do use every single day when I day trade. However, I use the DMI on a 1 minute time frame. So essentially what I'm looking for is, so when I take a day trade, the first thing I look at, I'm going to kind of talk through my day trade real quick here. So let's say we're charting and we're playing NQ right here. So this is obviously our 15-minute time frame. Every single one of my plays that I take starts on the 15-minute time frame. So what I'm looking for is trend. So as you see, what is our trend? Our trend is down. So I'm not looking for a long opportunity. I would be looking for a short opportunity. The best plays I ever make are from the 15-minute chart, that then I take a 5-minute play and then a 1 minute play. And that's how I find my perfect entries and my great exits. So the best thing you want to look for, in my opinion, for entries are double tops and double bottoms. So this right here, so again, trend is down, but I'm just going to point it out because this is a clear reversal, and this is why. So you have your clear breakdown. So we obviously have a really, really, really nice double bottom. Any sort of double bottom, I put a lot more weight in. But the difference here is that we have a bullish engulfing candle right here. When you get this bullish engulfing, and bullish engulfing means essentially the candle body of the next candle right here, you can see engulfs or covers the whole previous candle. This is a strong indication of a reversal to the upside. Now, as you see right here at 12:30, it does not always result in upside. That is why you need to take other things into consideration when you are using this as a reversal. But this right here is another great example. So if your trend is down, likely I would not have taken this long, mostly likely because I would be looking at downtrend and I'd be looking for a short opportunity. So you can see we get our double top. This is at 215 here. So we have a really, really nice double top. So it rejects the breakout. And then we have a bearish engulfing candle. This is then an entry to the downside. So what you're looking for here, if you were using the DMI, is when you see this candle here, so this is our 2 p.m. candle, what do you see on the DMI at 2 o'clock? It is over the 90 level. So anything over 90 is overbought. Anything under 10 is oversold. So you see we have a failed breakout candle right here. We get a double top, and you would see here that the DMI breaks to the downside. So this one doesn't actually use arrows. It uses S for sell and B for buy. So essentially what this is saying on this indicator, if you were watching it live, it would flash a B, and that would mean, okay, buy along right now, and it's going to push up. So that's kind of how you can use the DMI. So let's go ahead and look here. So let's do this 12 o'clock drop. So let's say, well, actually, let's do this because it's a little bit better of a DMI setup here. Let's say we have a breakout here. So we see our DMI is pushing down. So that means trend should be coming down. So let's say we found our 15-minute double top at 11:15. So what I would do is I would go over to I would go from the 15-minute, seeing that there's a double top I want to short. I would then go to the 5-minute chart, and this is 11:15. So same thing here. Okay, so we're getting our double top. So likely once this candle closed, I would already be looking for the short. And once I'm seeing that this is failing to the upside and this candle is starting to fill to the downside, I am already thinking about taking a short. Now, you can look for and wait for the 5-minute candle to close to have confirmation, which then you could take it on the next candle. So then let's say I wanted to take it at 11:15. I'll say, okay, we are not breaking out. We are obviously failing. So then I go to the 1-minute chart. So 11:15. So I have my 15-minute double top. I have my 5-minute double top. I see the breakdown. So I'm looking, okay, 11:15. Oh, look at that. 11:16, 1-minute candle. Big old doji rejection here. And then again, you look at your 11:17 candle. What is your DMI doing? It already started breaking down at 11:13, which tells me that we're looking to the downside. Again, look here. We had a failed wave breakout. This right here is a strong indication on the DMI that trend is going to continue down. If you ever see one of these half waves, so let's say we were coming down, but then we attempted to break out quicker, but then it failed. This breakdown is a strong breakdown 9 times out of 10. So then for my entry, what I'm looking for, if I'm watching that 5 and 15-minute double top play out, I'm watching it fail to the upside, and this actually is a trade I took on Friday. Then once I see that this 11:17 1-minute candle right here opens and does not push over and it starts breaking, this is my entry. That's how you go from 15 to 5 to 1. And this is what I would be watching on my other DMI indicator that I have, which is a little more complex and advanced on Thinkorswim. So when you see DMI supporting the 1-minute trend, which then supports the 5 and 15-minute trend, that is the entries I will take. That's how I find my trades. Okay, so that's the DMI. I love the DMI. I think it's a great indicator. I think many people could just use the DMI with price action and have high success. There was a long period of time when I was still doing options back in 2023 and even some in 2022. So it'd be early 23, but late 2022, where a lot of my strategy did come from the 1, 5, and 15-minute DMI. So solid indicator, highly recommend. So next one we're going to talk about is the fair value gap. So this is not one that I prefer to trade. I know a lot of people absolutely love the fair value gap and they think it's like the greatest thing in the world, but a fair value gap is especially popular among price action traders and occurs when there are inefficiencies or imbalances in the market, or when the buying and selling are not equal. Fair value gaps can become a magnet for the price before continuing in the same direction. I would say of this chart that you have right here, this right here is your best example of a fair value gap. So essentially what happens is, let me show the actual indicator. So it's Lux Algo. They are a popular indicator. People also, they put out a lot of indicators, but that is what the name of it is right there if you're looking to find it. But essentially what happens, so we had this bottom here at 845. You see we pushed up. These green shaded areas, these are the fair value gaps. So what would happen here is we push up, and this right here, 10 o'clock, on Friday, we had gotten data at 10 o'clock. I think it was the ISM data. So we had a huge push up. So what you will see happen here is this candle would have closed at 10 o'clock. So our 10:15 candle comes, and of course you wouldn't have already had this big wick here. You would have been left with this huge shaded area. So essentially, this is a little bit more than 50% retracement. But essentially, the fair value gap theory is that the candle will come back down and fill about 50% of the previous candle if a gap was left. So you can see the 10:15 candle opened. We then had a massive wick from 16,539 all the way down to our low of 16,511. And if you look here, that's about 50%. So that filled our gap. And then what did it do? Hard wicked up and boom, continued to the upside. So you can kind of see the same thing here. 11:15, we had a huge breakdown. So we would have left a gap right here. And then you see what happens is we wicked up. And again, this one was not quite 50%. This was about 25% before our downside continued. So that's kind of how people use the fair value gap. And then you can see, if you were a gap trader, you can see these lines, and you can, I'm going to really zoom out here. So these are all gaps that were left. So the theory here is that these gaps eventually will fill. So, this gap right here, so we came down, we had two gaps, big gaps essentially that were left. Especially this one right here. This was a huge gap on the 4th that was left. So you saw then Friday, it filled the gap. So, some people really like it. Some people think it's great. I used it for a while, but for me, I just never could quite get the right grasp of it. It just never quite benefited me enough. So here we go. We're going to go to exponential moving average. So the exponential moving average is a technical chart indicator that tracks the price of an investment over time. The EMA is a type of weighted moving average that gives more weighting or importance to recent price data. Like the SMA, the EMA is used to see price trends over time, and watching several EMAs at the same time is easy to do with moving average ribbons. So I love the EMA. I think it's the greatest thing ever. If I ever had to choose, and for some crazy reason, I could only ever use one indicator for the rest of my life, I honestly probably would choose the EMAs. I think I could do just as good with the EMAs as I could anything else. So this is the 15-minute chart. So again, On the 15-minute chart, I like the 5 and 20 EMA. On the 1 and 5 minute chart, I like the 20 and 50 EMA. For daily charts, I use the 8, 20, 50, 100, and 200 EMA. The power of the EMAs, as I call it, is to know the bigger macro trend. So let's take a look at Friday. So overnight, well, let's go back to Thursday. Thursday was a bear day. So blue line right here is our 5 EMA. So that's your faster. So that's the shorter time frame. And then your green is our 20 EMA, a little bit longer time frame. In theory, anytime the EMAs are crossed under, so that would be the 5, the shorter time frame, is under the 20, the longer time frame, that is a bear trend. If the 5 EMA is over the 20 EMA, that is a bull trend. In theory, as you can see here, we crossed under, huge moment right here. We crossed under on Thursday at 12:30. Once we crossed under, we came back up, and this right here would have been an amazing short opportunity. We came up, we put in a 15-minute double top, and failed to get over and close over the EMAs. We then came down and we rode, and you can see we continue to bounce off the EMAs. So all the way from Thursday at 12:30 when we crossed under, we traded under. You can see not a candle was really broke out over that EMAs. Even here at 3:30 in the morning, we broke up, double top, boom, right back under the 20. Until, boom, right here, 9 a.m., we bullishly crossed our EMAs over, and then what happened? Massive breakout. And then this is how you can use the EMAs to confirm your trend. Every single candle from 9 a.m., 9:15 really, until we broke down at 11:15, rode that 5 EMA support. So for me, when I'm taking a trade, and I want to be in trend. So you'll hear me during the day when I'm talking about day trading and stuff. You will hear me say, I'm looking at the EMAs. The EMAs are crossed over, so I'm only looking for a long. You know, we might have got this doji candle right here at 9:45, but just because we got that doji candle, we never broke the EMAs. So I would only be looking at the upside. Really, this candle right here, because we got the 15-minute double top, we came under and then we closed under the 5 EMA. That is a break in trend. You can use candles like this as moments to understand when trend breaks or doesn't break. So kind of same thing here at 3:30. We were then bearishly crossed under until we had a double bottom, engulfing candle, and closed over the EMA. Then we broke out. So that is the power of the EMAs. And we'll go down to the 1 minute time frame here. Let me change my settings here. So if you want to change the length, you just go, length is your time frame. So 20, put both on 20, and then we're going to go over here and go to 50. Oops. 50. And 50. So this is your 1 minute time frame. So this is also a powerful way to take entries. So I'm going to go back to that 11:15 play. That was a great example. So right here, you can see we have that 11:16. Boom, 11:17 comes. You get your 1 minute drop. It closed under the 20 EMA. So from there, you can see we had an attempt to actually get back to that 20 EMA. So again, on the 1 minute time frame, we do 20 and 50. It failed to get back there. So we should have known once that happened that this is a downtrend. This is a trend to the downside now. So you can see also, so let's see, I'm trying to find a good example here. So here we go. So we had our breakdown, we come down, we move up. Right here is also another good example, along with right here, of short opportunities. This right here is a perfect short entry for a play. And this is probably one I would have taken. So you see we come down, we failed to break back out. So breaking back out would have been a closure over the then 50 EMA, which you see right here, bearishly crossed under. So trend is now bearish. We come back down. We start to ride the 20 EMA resistance. We get a rejection. Boom, we come up. You can see here, we touch the 20 EMA resistance. We have a 1 minute double top, bearish engulfing right here. Boom, we break down. This hard rejection right here, once it closes and this candle doesn't immediately pop up, and as soon as it starts to break lower, that price action just says you better go short right now because it's dropping. And then you see what happens. It just goes in a big drop. Give me 1 second here. So somebody asked, why do I primarily trade futures? So I traded options for a very long time. I actually really loved trading options, and I made a lot of money trading options. But in my opinion, once everything started going to 0 DTE every day, and we started to see, the VIX 1 DTE came out, the Qs, SPY-X, SPY, now the treasuries you can do 0 DTE on. Once all that started to happen, my strategy just stopped working. So I think it was about June 2023, it just stopped working. So, over time, if you trade long enough, it's going to happen. Things are going to stop working. And primarily, in my opinion, the thing that killed my option strategy was the VIX and Bold. So I'll just kind of go on a tangent real quick here so you guys understand why I trade futures now, because it's a good question. So on VIX, primarily, and especially this year, it's happening a lot. 2022, it happened a handful of times through the whole year. 2023, it also started to happen far more frequently. But in general, and you can even see it right here, when you see the VIX down 5.66%, and SPY closes up 0.11%, NQ closes up 0.09%, and the Dow 0.01%, that doesn't really make sense. When you're seeing a massive drop on the VIX, you should see a solid move up on the markets. And this close here, in my opinion, doesn't even give you the correct picture, because really until the final, and we'll even go there, until the final, this is 1 minute, hold on 1 second here. Until the final 15 minutes, 30 minutes of the day, markets were red. As you can see here, we were red. And then we had a little, probably options rolling off, and we closed barely green. So you were going to have a red close on markets and a big, big red close on the VIX. So the VIX was an integral part of my scalping strategy on 0 DTE. I would essentially look for the times when on the short-term time frame, like a 5-minute chart, that the VIX was breaking out and that SPY was breaking down with it. So once those two basically started to diverge opposite directions, that was a perfect entry. And then I also used something that was called Vold. So essentially what Vold is the up and down volume of the NYSE. So essentially what that means is the candles measure, and you can put it down on a 1 minute time frame, and it'll show you what volume is doing. So is there more buying happening or more selling happening right now? So I would use Vold, and let's say the VIX is breaking to the upside, SPY is breaking to the downside. If Vold also was going to the downside, so had a red candle, which means there was more selling at that time than buying, that was, I would say, a high percentage, 90% odds that it was going to short and it was going to move that way. Come 2023, Vold started not making any sense. We would have days where markets would go up all day long, and you would never see a green candle on Vold, which means there was never more buying than selling, yet market was going up. And there was also times where you would have green candles on Vold almost all day. It would be in a clear uptrend all day, and you would have a bear trend on the day. It just didn't make sense. And now you also have the VIX where, you have the VIX opening up 10% and then closing down red. but SPY isn't seeing the same movement. So essentially, my strategy just stopped working. So I had to find something else. Somebody a long time ago told me I should trade futures, and I said, okay, I'll try it. I wish I would have done it a long time ago. It took me a long time to kind of get into a good groove and a good strategy and really convert my option strategy over to futures. I had to go from super micro time frame because, you know, options I always traded just 1 minute time frame basically. And that was my focus, because you could take, you know, on a 1 minute candle, you could take 20% if you timed it just right. On futures, you need the movement. So essentially, that is why I primarily trade futures now, because options, in my opinion, are priced to lose. You know, there's also a lot of days now where we are not even seeing the implied volatility move happen. So you might pick the correct direction, you might pick the correct strike, you might pick everything perfectly, but SPY is not going to move enough to reward you. And that's what I basically got sick of losing and being right, but it just wasn't right enough. So with futures, it is pure price action. It is pure if this moves up. So if this candle right here moves up 30 points, I get 30 points. You know, that is just how it is. 1 point's $20. There is no in between. If no matter how many times it goes up and down, 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 when it stops right here again, it is still 30 points. You know, it could drop down 100, 85 points, but then when it comes back right here, I will still be up 30 points. That is what I like about futures. It is pure price action. Okay, one last indicator we're going to talk about here is opening range breakout. So I love this one too. There are 3 different ones that I have highlighted right here. There is this one, and this one. Again, I never day traded from TradingView, so these are something I added on. I did a video a long time ago about opening range breakout, so I'm not going to go into a ton of detail on it. There is another dedicated YouTube video to that that you can check out. But this one right here, I really like the opening range with Fibonacci's. So essentially what you're looking at here, and honestly, I'm not even sure if this is going to set up correctly because this is futures here. Let me take a quick look here real quick to see. That should fix it. Okay, there we go. So the way this works, opening range breakout. So essentially what opening range breakout is it takes a time frame of a candle, and that is your range. So I primarily use it on the 15-minute time frame. So you can see here, you have your peak of your 15-minute candle. So that is this dotted green line. So on Friday, the peak was 16,494. And then you have your trough, your very farthest point to the downside, and that was 16,437.5. The theory is, it's called breakout for a reason. Once the candle closes over this line, price in theory will break out. I like this one because it gives you price targets. You can see, so if we were to break out here over 16,494, which we did at 10 a.m., your next target would be 16,558. And then if we would have kept going, you got 16,614. You can see we got over 16,558 and then we dropped. So the same way you can use the opening range, you can use these other levels too. So once we lost this upper level, you should have thought we're probably going back to opening range to test that. So then what did we do? Boom, right here at 11:45, we popped, touched it almost to the tick, and then bounced up. And then here at 12 o'clock, we lost it. We closed back inside opening range. So your theory should be we're going to test now the support from opening range. And you can see over time exactly where we touched. We touched it. We could not close over. And then where did our huge bounce come at 115? Right off the opening range breakout support. And then we shot up. We had a failed breakout right here. So we two candles in a row. We touched it. We rejected. We did close over it. So actually this would have been a potential breakout, except for it was a doji candle. So then this candle failing to close over that opening range, you should have in theory thought we're going back to support. And where did we go? Right back to support. I love opening range breakout. I think it is a powerful strategy, and very often you will hear me talk about during the day when I'm looking for a trade. So if I was looking for a long right here and I said, well, we have to close over opening range breakout at 16,494 before we take the long. However, you can put this on the 5-minute time frame here. So you're going to have to go into your settings and adjust it to what you want. So if you want it on the 5-minute time frame, then you need to put this down to 9:35. So that gives you a 5-minute candle here. So here's your opening 5-minute candle. Again, our support, our low, 16,437, our top, 16,486. So what happens? 9:30 comes. Look exactly where 9:35 rejects. Perfectly rejects, double tops. We come down, we bounce. Look at that. Perfect rejection again at 9:45. 9:50, doji candle, failed breakout. Come back down, boom, 10 o'clock, what happens? We break out. And where's our target? It's this blue line right here at 16,541. Almost perfect. So we kind of break out, we failed, we find support, we close over it again. We go for our upside here. We can't quite get there, but that's okay. So again, we lose our support. So where's our target? It's opening range support. There it is. Here again, we lose support. Where's our target? It's the support right there. So right here, we retook support, or resistance rather. What's our target? It's the next resistance, and there it is. So that's the power of the opening range breakout. In my opinion, if you use, so this is, again, we're going to have the EMAs on here. So we're on a 5-minute chart. So we have our 20 and our 50 EMA with our opening range breakout. So let's play this through here. Let's say we have our morning, we break out, we have our 5-minute ORB put in. So here we go. You can see what is our support? What is our trend? EMAs are bullishly crossed over, so our trend is up. So should you expect this candle to continue to the downside? You should not. So again, when this candle fails, you should be looking for the upside. So a lot of times you will see this, you will get a failed breakout before the breakout happens. So right here is 2 perfect examples of that. Once this candle did not close over ORB and we come back down and you get this 5-minute double bottom right here, this honestly would have been the perfect long opportunity. The reason being is we had 1 failed breakout, which means we're going to go for another test of it. Not only that, but our trend is bullish. This is a double bottom support bounce off the EMAs. So we're holding EMA support, and now we're going to go for the breakout. As soon as we start pushing over this level right here, you should have taken this long and you could have rode it up. So same thing here. Like I said, a lot of times your levels will have a failed breakout before we move up. So we had a failed breakout, we come back down, we find support off the EMA, double bottom, then what do? Boom, breakout. So that's the way you can trade these EMAs and with the ORB. So we'll go back, this is Thursday. Let's go back to the day here. So this one actually added on a third level rather, because you can see how high we pushed. So it had to give you a third level. But same thing here. So we basically chop in the 5-minute range here. And now this is the hard one here because your EMAs are actually crossed under. So once we broke out right here, you have a choice to make. Do you think we are going to flip trend? Now with this massive bounce off support and consolidation right here, so you can see basically from 8:35 until 10 o'clock we consolidated and then we broke out. So you could have waited for this candle to open and you could have been thinking double top to come back down, but as soon as we bounced off this 20 EMA support here, that's when you start to look up for your breakout. So then you can see we came back down, and what did we do? We retouched EMA support, and then we started to ride support, and boom, massive breakout. We hit our first level. We came a couple points from our top level before, unfortunately, we came back down. So again, if I was going to set up my trading view, I would put on this opening range breakout with the levels. I would have on, and this is a 5-minute chart here, I would have on the 20 and 50 EMA on the 5-minute, 20 and 50 on the 1, and 5 and 20 on the daily. And then the personal indicator that I would add is your DMI stoke right here. I don't know why this thing wants to go to having the line be white for whatever reason. Probably because people use dark mode and I don't use dark mode. And then I would add on your DMI. If you had DMI on for this trade right here and you saw that we got a fake wave down before we broke out, you know that's a strong move to the upside. So you have your 5-minute double bottom, bounce off ORB support, bullish engulfing. We took the EMA. Our DMI is waving up. This is a high probability breakout. So same thing, our DMI comes up. It kind of resets. What do? We bounce off support. Oh, DMI is breaking out with us. Let's take the long. So that's these are the 3 indicators that I think if you put those on your chart, I think you can trade price action and start reading candles. Start reading 15-minute double tops, double bottoms, doji rejections. And then, you have your 15-minute chart, your 5-minute chart, and your 1-minute chart. So you basically, like I said, find your 15-minute trend. Is it up or is it down? Look at your 5 and 50, your 20 EMA. Then you go to your 5-minute chart. Okay, is the 20 and 50 EMA up or down? What is our trend? You're looking at the 15-minute double bottom. So now I'm looking at also a 5-minute double bottom for a breakout to trade. Okay, I got my breakout on the 5-minute. Now I'm looking at the 1-minute. Oh, there it is. There's my 1-minute doji reversal candle with DMI waving up. There's your entry. So overall, I hope this video was helpful. I know a lot of people wanted a video like this, just kind of explaining what to put on TradingView, how to set TradingView up. I think these 3 indicators will really help you. I think that you can have some high success with these. If you guys have any more questions, let me know. There is a free trial open this week in the Discord. So if you have any, if you want to get in on that, just send me a message. But if you have any questions just about day trading, if you have any questions about your setup, how to get the indicator to work better, just send me a DM, drop a comment on here. The comments on YouTube kind of suck because they don't always notify me. But let me know if you guys have any questions. I do hope you guys enjoyed this.